Alright, so hold on a sec. Welcome to another video. So I don't know why I've done this. Here we go. So I've drew some stuff out here for you guys. So first off, what is liquidity? Very simple. Liquidity is just orders that need to be filled. Well, for the most part, it's money, right? It is money sitting in the market. There's certain areas, right? Now, an example of this would be consolidation. Okay. Now, there's liquidity here, right? There's a shit ton of liquidity all the way under here, and there's a lot of liquidity up here, right? In the form, these can be in the form of stop losses, liquidation, buy, sell, right? There's a lot of liquidity above and below. Now, what usually happens is when it gets above, it usually traps. You got people buying to go long. You got the sellers getting liquidated, hitting their stop losses, and then also other things, right? And then what happens is because of that, there's so many orders are getting consumed by essentially the big money, right? It gets consumed. What happens is it makes its move, bang, and that is an impulsive move to the whatever way you're expecting it to go. Obviously, you will use other factors. That could be daily time frame, weekly, monthly. Doesn't really matter. I mean, as long as you understand where it's heading for the day at least, right? Like, where has it been heading the past few days or week, right? Is it going up? Is it going down? Because if something's going up, right, on the smaller time frame, right, it's bearish, but then there's another time frame that's bullish, and you need to identify and understand other certain areas. That could be obviously liquidity. That could also be fair value gaps, order blocks. It could be a lot of things. So obviously you need to understand what it is. Okay, this is just one thing of many things. Okay, so here is a great example. Liquidity, right? Above this, liquidity, bang, comes out. Okay, you could have taken a trade off of. Here. You wouldn't take it off here directly. You would take it off of this level or this level. Realistically, you would not. Definitely do not take it straight off this. But obviously you can. If that's how you do it, then do it. But it all comes down to how people trade. And for me, no, I would not do it off that. I would do it off of this or this. Why? Because it hits my order block and pushes it back down. But again, order blocks are something else that you might learn another time when I decide to make that video. Okay, so again, liquidity here. Liquidity got swept. What happens? Rallies. Why does price rally after liquidity sweep? It's because orders have got filled, right? Liquidity is being consumed, okay? So what happens? It takes its move. It takes the move it wants, right? When it gets to that area, when it's been sufficed in a way, right? Then it makes its move. Otherwise, it's just collecting orders, and then obviously, bang, collect orders through liquidation, right? Sell, buy, whatever. It takes all of the orders and it fuels it for that move, right? Liquidity up here. I mean, let's just say this, alright? Liquidity is above everything and below everything for the most part. But then you got to understand fair value gaps, right? So if you look on this, I don't know, 1 hour time frame, for instance, okay, this is a perfect example of fair value gap getting filled. This, and this, okay? So, can I replay this? Yes, I can. Perfect. So, at this point, say you haven't even entered a trade and you just saw price come down, but you want to enter a trade, what do? Okay, well, you can already understand that there's a fair value gap here, right? And we'll get into this into another video, but this is just lack of liquidity, right? So what are you expecting? Expecting this area to get filled. with, you know, because there's no liquidity. There's no liquidity in those areas. So what happens? I mean, how do we use this? Can I just speed this up a little bit? There we go. What happens? Price comes in, right? It comes in, takes that area. What happens after this? It comes down. You know? What happens again? You know, retests. And this is now what I would see as consolidation, right? There's liquidity sweep up here, liquidity sweep down here. You know, it's just liquidity sitting above and below both of these, right? And then obviously it makes its move, right? So this area, obviously, looking at it logically, right? You've got your fair value gap, right? Area of liquidity, right? Perfect. It gets filled. Okay. Wicks above. I would class this as a sweep. So you know, like I said earlier, you can enter your trade off of, you know, you could have entered your trade off of this area. So if I highlight it real quick, you know, this area you could have taken your trade from. Get rid of this. You know, so anywhere from here, as long as it touches that area, right? Short, you know, could be here. Once it goes back to that level, right? Start just above last liquidity sweep. Target previous areas, one here, one down here. What do you do? I've already marked them out, by the way, guys. But yeah, takes it perfectly. But yeah, you want to wait for your order. So even here, right? I wouldn't necessarily get in straight here. I don't think that's a good idea. I'd probably let it develop a little bit first, to understand. But again, here you could have taken it because you see a wick, and then what happens here? There's a breaker structure, right? So when that happens, you're looking for price to come back into this range. What taps in, takes down. Okay, easy. That's liquidity, right? That's actually more fair value gap, but that's still related to liquidity, right? Here, sweeps. What happens? Price goes down. Sweeps, rallies higher, right, and higher, and then another sweep down here. Okay, this is just easy. This is so easy. You know, look at that. That could be news related. Doesn't matter. Liquidity swept, rallies, right? So here, yeah, liquidity swept. Okay, break a structure up, right? What happens? Hold on. Fills this area, right? This is just showing some of the trades you could take. Hypothetically, target this area, okay. Just underneath, right? 15%, you know, 18%, you know, a very nice trade overall. Okay, easy. You know, and that's basically it. Liquidity basically sits above and below any candle really. You know, we go on Bitcoin for instance. This is on a 4-hour. As we've seen, Bitcoin has just been consolidating for the past like few weeks now, since the 23rd of June. So a while. You know, it's maybe fell below 30k once or twice, but it hasn't much. You know, and there was this yesterday, which was just fucked. Where it just shot up and then it got dipped back down. You know, but yeah, it looks like even Bitcoin right now is slowly starting to progress upwards, and we might see it break out upwards soon. Again, obviously Bitcoin probably is one of the main, to be honest, cryptos. Okay, what do you see? What do you see when you look at this? Is price going up, or is it going down? Like, what do you see? Okay, up, pull back, up. Right, it hasn't broke it yet. Why? Because there's a huge amount of resistance at this level, right? 30k, you know, 31 point, I think even 31.8 or whatever, 32k. That area right here, where it's at, is basically huge resistance for Bitcoin. You know, and if it breaks that level, we could see, you know, close to 40k quite quickly, to be honest with you. But then a lot of people are also saying that with Bitcoin right now, it's due to retrace, because look at this. There's no liquidity, You know, this is what you'd call a fair value gap, right? Where there's lack of liquidity. It touched it once, 29.4, but that was probably news. But yeah, so yeah, that's going to be it for this. But I hope that you understand a bit better now of liquidity and how you can use it for trades, right? You know, liquidity swept here, right? Okay, liquidity swept, came back in to an order block after the breaker structure, tapped in, right, and it rallied, right? It's as simple as that. But yeah, I hope this kind of helps you understand a bit better what liquidity is and how you could potentially utilize it to make money. That's what I'm trying to help people understand, okay? And also for myself. And yeah, that's going to be the end of this video. I hope you found some sort of use of it, maybe, maybe not. And yeah, I'll see you in the next